or the value of money is dependent on the overall supply. Let's say there are 100 units of money in the economy, you own 10%, you own approximately 10% of the purchasing power in that economy. And if the government now supplies another 100 units of currency, you basically have half of the purchasing power, and the government, quote unquote, stole the other half through inflation. One of the most used investment methods is real estate. There are certain reasons for it. Number one reason, real estate is scarce, which is a similarity with Bitcoin. Houses will always go up in value. Could change to Bitcoin will always go up in value. Houses are potential liabilities. But I believe overall the financialization of the asset real estate and the speculation that's happening in real estate long term will move over to Bitcoin.
Welcome back to Decentralized Radio, your one-stop shop for education on how you can take back control of your health and your wealth and live outside of the centralized systems that are plaguing our society. We're hosting industry experts every Tuesday live and also releasing podcasts Friday morning. All right, welcome everyone. We are live in Jackson Hole here with Leon. Leon, how's it going?
Good, man. How are you?
Not bad. We just had a pretty epic mid-morning, mid-afternoon, midday, cold river plunge, hot springs. What did you think?
It was amazing. Thanks for taking me. I really enjoyed it. Both the river and then the hot springs. That was pretty special. First time actually that I went into natural hot springs, so pretty cool.
And you're a big fan of cold exposure.
Definitely. Yeah.
What do you love? Tell me how you got into cold exposure and what you love about it.
Yeah, I have to be honest. Unlike you, I don't know about like the data behind it or the scientific benefits. I just enjoy doing it because it helps me to focus. And I got into it through a good friend that you already interviewed, Moritz Klatten, who got into it through another friend called Daniel Ruppert, who was one of the first instructors that worked with Wim Hof in Germany. And we visited one of his seminars a while ago. I'm training boxing and martial arts and strength training with Moritz, and he suggested it as a way to recover quicker. That was like 3 years ago. And now I'm doing it. I don't do it on a daily basis, but I do it on a regular basis. So I do it definitely once a week, and I incorporate cold showers into my day. Not always in the morning. Sometimes in the morning I have a bit of a relaxed wake up, and I do it in the afternoon to wake me up. And I try to travel to different places and get exposure to the cold there. And usually when I'm at a place, in order to like arrive at that place, it really helps me to go into the cold. Now we've already spent some days here in Jackson, but I try to usually do it on like the first or second day when I arrive at a place, and just to connect, focus, and arrive after traveling.
Yeah, I think it's a really powerful tool, and we talk about it, I talk about it quite a bit, but even today, right, like getting out in nature in the sun, like going back and forth from the cold river, which is very shallow and quite a challenge compared to like jumping in a lake to the hot springs. It's just a great way, and getting outside. We'll get into your Bitcoin story and everything in a minute, but I'm curious, how do you feel in the winter time when you do regular cold? Because you're in Germany,
Yeah.
it's gray, it's cold, not a lot of sun,
Yeah.
not a lot of light.
That's true. It helps, man. It really helps. It really helps me. I get less sick. I would be lying if I say I never get sick, because I get sick like once a year. I get sick usually around I think November, December time, like when my body needs to adjust. But what I do now, I used to get really like frustrated with me being sick, and now when I realize like I'm getting sick, I take the time for like 2 3 days to relax. I work less, so I have less stress in my life, and then after I recover, I go into the cold right away, and that just rejuvenates me and gives me dopamine, I guess, and helps me also to go through the winter. And it also allowed me to love the seasons much more. Like the winter used to be a time that hate is a very strong word, I don't want to use that, but I really disliked the winter. And now I have a different relationship with winter and with the seasons. And living in Germany, I can't get around being the seasons, and now I have a positive relationship with the cold, and I actually really enjoy being in the cold and having the cold around.
Yeah, I'm the same way. I mean, this past year, I've taken a dive into the winter seasonality component more than I ever have, and I feel better than I ever have. So it's no coincidence, and cold plays a big part of that.
Yeah.
So it's really cool. But we're here for the Bitcoin Ski Summit. We're here to talk about Bitcoin. So your expertise is in the realm of both Bitcoin and real estate and how that connection goes. And how did you find Bitcoin in the first place? I don't even know if I've heard this story from you. What was your orange pilling moment?
Yeah, there were a few. There were a few, and it took a long time until I trusted my intuition and really embraced Bitcoin fully. And I think that the cold actually had something to do with it as well, because it allowed me to let go of some fears that were unnecessary. But the first time, let's say, Bitcoin came into my life was when I was studying philosophy. Um, and a friend of mine was using Bitcoin, and he told me about it. And I thought it's actually just the logical development of the internet. I remember actually, I don't know if I ever talked about this, but when I was about 12 years old, I had a computer game that a friend of my father gave to me. And when I played this computer game, I was really agitated because I couldn't take the coins, like the money that I made in the computer game, with me into another computer game. And that just seemed to be illogical. So when I learned about Bitcoin a couple of years later, that just like seemed logical. So I didn't even question what Bitcoin was, and I didn't look into what Bitcoin was. And then from that time onwards, Bitcoin was part of my life, I guess. People around me started using it. And then a few years later, I started financial economics. And I really wanted to dive deep into what Bitcoin is from the economical aspect. I got into Austrian economics. And then I wrote my master thesis about Bitcoin. And I looked into first of all, I looked into the history of the cypherpunks, like where does Bitcoin come from? Who are the cypherpunks? Who were the inspirations of the cypherpunks? So then I learned about Mises, I learned about Menger, I learned about the Austrian school, who I didn't even know existed. So I only knew Keynesian economics. That's what I was taught in school, and also what I was taught in university. And then I looked into the possibilities of Bitcoin specifically for the remittance market, and I specialized on the African market, because at that time, that was in 2015, there was a currency called the M-Pesa in Kenya. And as far as I know, Pesa is Swahili for money. So M-Pesa was mobile money, SMS, so mobile messaging that turned into a currency. And Safaricom, which was a mobile provider back then, and Vodafone, they created this whole economy. And at some point, I think 80% of the Kenyan economy worked on the M-Pesa. And then my whole theory was, similar to how China went from having no telecommunication to directly into the internet, some of the African countries could go from having no banking infrastructure directly into Bitcoin. It's actually happening now, but it took way longer than I thought. So I thought it will happen around like 2015, 2016, 2017. It did not, but at least it allowed me to understand like the potential of Bitcoin. And then I went into the real estate world. So
This podcast is brought to you by our lead sponsor, EMRtek. EMRtek manufactures high quality, high powered red light therapy devices. In my opinion, red and infrared light are two of the biggest nutrient deficiencies in our modern society due to our indoor lifestyles. Red light therapy devices, like the ones from EMRtek, can help combat that by providing high powered red light while being indoors. I personally use mine every morning and every evening. Red and near infrared light is extremely beneficial for energy production in our body because it boosts mitochondrial function and penetrates deep into the cell. It is also extremely beneficial for skin health, eye health, as well as our circadian rhythms. And this is actually pretty much why I bought everyone in my family an EMRtek red light therapy device for Christmas. EMRtek panels are low flicker, low EMF, and use targeted wavelengths such as 830 and 630 nanometers, amongst others, to get extremely effective results. For more information, go to emrtek.com and use our code DRadio10 for 10% off your order. That's emrtek.com with our code DRadio, DRADIO 10 to save at checkout.
And before we get into that, what was it, what was the reception of writing a master's thesis on Bitcoin? Like, did you have advisors? Did you have peers? Like, how was this received? Because that's like pretty early on. And I'm sure in a Keynesian economics school, just typical,
yeah.
they wouldn't be a huge fan of that.
Yeah, no, that's true. I have to say that the professor that I particularly worked with, who was my advisor, he was receptive for the idea, but the university was not. So initially, when I wanted to write the thesis, the university said that it's not a topic that we want you to write about. We want to write you about a topic that has any type of significance for science. And then I looked into what Bitcoin is, the cryptography behind it, the engineering system, and I said this is a monetary technology that could revolutionize finance. And I appealed to the university. I looked into the guideline of the university. What does a master thesis have to fulfill in order for it to be writable, so to say? And then they allowed me to write about it. And my professor was actually very helpful. We have never talked ever since. I have to admit, I did approach the university like 2 3 years ago, and I said, guys, if you ever want me to come back and just like talk about my experience and help teach students about Bitcoin, I'd be more than happy to. But they said they are not interested. And from my let's say friends and family, some parts of my family, they were very supportive, and other people thought that I like lost my mind a little bit. But I guess that's an experience that everybody can relate to. But I had a good time. I remember the summer very well, summer of 2015, and I took 3 or 4 months. I didn't go on holiday, and for 4 months I was just reading on Rothbard and Mises, and I read the Cypherpunk Manifesto. So I went to Eric Hughes, Timothy May, like all these players, so to say, and I went quite deep that rabbit hole. But then at that point of time, I think that the market cap of Bitcoin, I mean, it was pretty low, and there was no career like in Bitcoin. So then I joined the real estate business. And I have to also be honest with you, I liked Bitcoin because I liked the cypherpunks, I liked the technology behind it and the potential. But at that point of time, I was not able to imagine what Bitcoin would turn into. Yeah.
That's pretty cool. I mean, it's pretty early on, so the fact that your advisor was receptive, but yeah, everyone usually when people are thinking you're crazy, you're on to a good rabbit hole or a good path. I
Yeah.
think. I mean, if everyone thinks what you're doing is the right thing, then that's maybe when you should be questioning your decisions. So, getting into real estate before we talk about the relationship with Bitcoin, real estate has become to many like a safe haven investment, a good store of value. I mean, you've seen here in the US since 1971, the median household income and median household price of a house has deviated tremendously. So maybe talk to me a little bit about how real estate serves a purpose as both an investment and like a store of value in our modern world today.
Yeah, sure. Maybe I'll just start like by first principles. Some of the listeners are aware of it, some are not. So I just explain it from the start. So money, or the value of money, is dependent on the overall supply. Let's say there are 100 units of money in the economy. You own 10%. You own approximately 10% of the purchasing power in that economy. And if the government now supplies another 100 units of currency, you basically have half of the purchasing power, and the government, quote unquote, stole the other half through inflation, right? So what happens is that now people are forced to invest their money in order to save their purchasing power. So as the supply of money goes up, people are forced to invest their money in order to protect their purchasing power. And one of the most used investment methods is real estate. There are certain reasons for it. Number one reason, real estate is scarce, which is a similarity with Bitcoin. Bitcoin has a capped supply and is absolutely scarce. So it in that perspective works better than real estate, but there is a limited supply of building land. Zoning laws can change, but there is some scarcity in real estate, absolutely, similar to art. And the other thing is that real estate is usually bought on credit. And since 1971, as you said, the money supply went up. And since the early 80s, interest rates basically went down consistently. So what people do is when they buy real estate, they usually take credit, right? So this connection of cheap money available for people that want to buy real estate, and the fact that people need to invest their money, led to real estate becoming the number one store of value in the world. And I looked for, I write about real estate, as you know, in Bitcoin as well. And more recently, I looked at real estate prices all over the world, from Rome until today. And there were always times in history when land prices went up. For example, in Rome, there was a currency called the aureus, which was a gold-backed currency. I think it was from like 1 BC to around 400 AD. And when that unit was inflated, land rose a little bit in value because people went to land to secure their purchasing power. But what we saw since 1971, the extreme increase in housing prices, that's something that actually never happened in history before. So when we look at the development of housing prices, the development is year on year since 1971. Housing prices increased around 6.8 to 6.9%. Excuse me, the money supply increased around 6.8 to 6.9%, and housing prices around 5.9%. So almost on par. So what happens is, as money enters the economy, it enters the economy not only, but usually also through loans. So real estate acts as a kind of a reservoir for new money entering into the economy. But there are a few problems associated with that. I mean, we can dive into it. Obviously, housing becomes unaffordable. With that, the standard of living goes down, and that's one of the biggest problems of the fiat system, pretty much.
Yeah, and that's something I talked about with Jimmy Song. Is like just as the important data point you mentioned is 6 to 7%, 6.8, 6.9 is the real growth of the monetary supply. It's
Yeah.
not 2 to 3%
Yeah.
inflation. So and another repercussion I think that's obvious is just the quality of these homes. Being built today is very poor, and it's not built to really last. So something that maybe people are always concerned about, as well as they're always saying, BlackRock and China are buying up all the land and all the real estate, especially here in the US. What do you think about that? Do you think that's still like a main investment strategy for them going forward? Or do you think, this is changing and, they're about to pivot going forward? And is real estate a good investment in 2024?
Okay, I have to give a very nuanced answer, because I don't want to take away the fact that, generally speaking, buying and building real estate with a well-financed loan can be great business opportunity. We still develop real estate, but I believe overall the financialization of the asset real estate and the speculation that's happening in real estate long-term will move over to Bitcoin, because just as a store of value, Bitcoin is superior. Just if you look at maintenance cost, I mean, you don't have to maintain Bitcoin. It is considerably easy to store and considerably cheap to store compared to real estate. Giving some experience of like the market in Germany. So in 2021, we made a deal and we sold one of our properties to an institution, because at that point of time there were actually negative interest rates. So these institutions were forced to invest their money, and they chose real estate because there was at that point of time a 2.3% growth that they calculated on their money, which is very little. I mean, that's less than interest rates was like in the 70s or 80s on a bank account. So they were forced to invest into real estate. But at this point of time, the demand for real estate from institutional investors has gone down, both in the US and in Germany. So right now we're in a situation where there are almost no deals happening. Why? People do not want to sell and people do not want to buy. People that sell are still used to the prices from pre-2021 when interest rates were low, and people that want to buy expect prices to fall. So we're like in a situation where the market isn't really moving. I cannot answer. So to answer your question, I believe Bitcoin is a better investment, 100%, and there's no doubt about it. And the social norm of houses will always go up in value could change to Bitcoin will always go up in value. Houses are potential liabilities. Because what I believe is that Bitcoin will cause houses to drop to their utility value. And I can tell you from Munich, I looked into the prices of Munich real estate. And Munich is a good example actually for the global real estate market, because Munich is both seen as investable from European investors, but also US and Chinese. So next to the Germans, it's the US institutions and Chinese institutions that invest heavily to the European, German, and especially the Munich real estate market. And around 70% of the price of a condominium is the land price. So that tells you that the monetary premium that sits in real estate is very, very high, because if that would not be the case, construction cost, material cost, and labor would make up a higher percentage of the overall sale price. And since 2008, and in 2008 there was the great financial crisis, since then central banks have really flooded the economy with new money. Land prices in Munich have tripled. So in a time frame from about 12 to 13 years, so from 2008 to 220, 221, land prices have tripled because people just invested so heavily into real estate. But I could imagine, like I said, that will change, but that will also take time, because both you and me know that Bitcoin is a better store of value. And for the real estate investors, that was actually not so easy to understand, because interest rates were so low that they almost got free money. And getting free money and buying an asset that produces cash flow to pay back the debt is such a good business opportunity, without going into detail what the negative effects of this are for the society, but for someone who does not care, who only wants to make money, had no reason to look into Bitcoin. But since interest rates went up and real estate has become an unprofitable business or an unprofitable investment, real estate investors have woken up to the ability of Bitcoin to secure value. And I can tell you from the personal conversations that I have with the real estate people that I work with, 80% of them own Bitcoin, started buying Bitcoin within the last 12 months. Before that, they were literally not interested because of the interest rate environment, but now they are very interested and they are buying Bitcoin, and they are buying Bitcoin heavily. So I can see that one of the adoption wave, like next to the ETF, will come from real estate guys, because the investment thesis behind Bitcoin and real estate is very similar. Real estate developers, I cannot talk for everyone, I can only talk for the people that I work with, but what they very well understand is we live in an inflationary system and you need to buy scarce assets to hedge against monetary inflation. And that is an investment thesis that obviously applies to Bitcoin as well.
So the interest rate environment is what has made real estate unprofitable. And is it the combination of the interest rate plus the still continuing growth of the money supply, just rendering, the cash flow benefit of real estate less of a benefit?
Yes, yeah, exactly. So I think it's a combination of both. It's for once, interest rates have gone up, so the cost of money, cost of capital has gone up, and then the cost of construction has gone up tremendously, like big time. One of our properties, we wanted to start building like a year and a half ago, but we couldn't for whatever reasons. There were problems with one of the subcontractors, and real estate always takes time. It always takes longer than you think, sometimes years longer than you think, also for zoning laws and things like that. And it's going to cost us 35% more to build that property. The only reason why it's still profitable is because we financed the purchase of that property before. But if we would have to finance it now with 6% interest rate, that project would be unprofitable, and we would have to, I don't know, either go bankrupt or sell it off. So the combination of higher interest rates and higher construction cost is really problematic for the real estate market.
So do you think that's going to lead to like a large crash in the real estate market, or just like this gridlock and kind of just stagnation for a long time until the interest rate environment changes, which is also something we could talk about, because I think they've already forecasted maybe a slight dropping of the rates, but really they do want to keep them higher.
Yeah, I mean, if you think about it, having interest rates below 4 or 5% is completely irrational. Nobody, like for example, first of all, I wouldn't lend my Bitcoin out anyway, but on a Bitcoin standard, people will lend out their Bitcoin because Bitcoin then is capital, right? Yeah. Bitcoin is just a standard capital. So interest rates on a Bitcoin standard, I don't think will be below 10%, because nobody will be willing to lend out their Bitcoin, potentially lose that Bitcoin, then lose out on the future deflation of Bitcoin for under 10%. So generally speaking, interest rates should be higher, right? But because I work in the real estate business, I have an interest rate sensitivity because it affects us or affects business in general. So because inflation needs to be controlled, interest rates cannot go below 3 or 4%. So what is the consequence of that? I think the consequence will be two things. It will be what you just mentioned, the stagnation and a crash at the same time. So looking into different markets, so the Chinese real estate market is in a bad situation. The German real estate market is as well. The German real estate market is crashing already. So there's an Austrian real estate developer who is very famous, who just went bust. And he had a couple of billion in buildings in pipeline, and he can't finish them. And here in the US, I don't see the market crashing as hard, but I see stagnation, generally speaking. Now, I could imagine the stagnation to go on for maybe 2-3 years, but it's very hard to predict the future. But the approach that we've took is no deal. Finish what we started, secure the financing, and rather focus on Bitcoin. Focus on accumulating Bitcoin, focus on building maintenance reserves in Bitcoin, because the properties that we did already finish, with them we are required to modernize them like from time to time. Rather it's like a window, or now we need solar on the roof because that's what the German government wants, even though we have only 10 to 15% sunlight over the year in certain cities. But that is another discussion that we can also have on regulation, of course. But we are basically just making sure that we be able to funnel parts of our cash flow into Bitcoin, so we'll be able to maintain our properties because we are holding the properties long term. So we would develop real estate. I always tell everybody that we would develop real estate even on a Bitcoin standard. We see it as a service. We provide housing through a market. People pay us and we receive rent. What Mises called originary interest, which is basically the difference between costs and profits. And real estate is a nice business because you have a cash flow generating business. But the financialization process of the asset of real estate that happened over the past 50 years created so many issues, and I guess there needs to be a flush out of the market because it was not sustainable. You were able to get money for sub 2% and build real estate, then rent it out, consistently raise rents with inflation and make a killing, quote unquote. But that was not a sustainable market, and it had created not negative price signals, but price signals that were an illusion. When interest rates are below what they should be, things that are actually unprofitable seem to be profitable, but they're not. So we need actually clear out of the market so that there's no other way around it. But because we want to survive, of course, we think that Bitcoin is a great opportunity to survive this transition, both in a higher interest rate environment and towards a Bitcoin standard where real estate will collapse to its utility value.
If you're a health conscious food consumer who's also very active, you know how big of a struggle it is to find a bar that is both convenient and nutrient dense. That's why I was so excited when I discovered the Alpa Bar. The Alpa Bar is a meat based bar that contains only simple ingredients: 100% grass fed beef, tallow, and honey, and is both nutrient dense and convenient and packs a caloric punch of over 300 calories. For me, this was a game changer and is now the go to snack and fuel source I use when I'm hiking, camping, hunting, skiing, or doing anything in the outdoors and I don't have the resources to cook a full meal. The Alpa Bar is made proudly in Colorado and only uses locally sourced meat. JJ and Rob are also extremely based and accept Bitcoin for payment. I highly recommend you check out the Alpa Bar for any time you need a nutrient dense and convenient snack on the go. Check them out at eatalpa.com and use code DRadio5 at checkout to get a 5% discount. And if you pay in Bitcoin, you can get an additional discount on top of that. That's eataupa.com and use code DRadio5 at checkout.
Yeah, I think what you said there is so spot on, because we look at all these, like, I think the food industry is a great example of like fiat companies that only exist on like a 0 to 1%, interest rate environment, like Impossible Burger, like oat milk, Oatly companies, just like fake food basically. And they spend so much on marketing, and really the only reason they exist is because the cost of capital was so low. So, I mean, ideally interest rates do stay high, but there's going to be so much pressure from the Fed, or for the Fed, to drop them and then turn on the money printer. So how do you think about like this next 24 months and how it kind of unfolds? Because the macro talk we had in the ski summit, which was fantastic, it's like pretty much like a crisis is inevitable. We just don't know when it's going to happen. But the interesting point there is that everyone pretty much thought that's like whenever it does happen, like it's actually going to be good for Bitcoin.
Yeah, I'll answer your question shortly. I just want to comment on something you said because I totally agree. Something interesting about Bitcoin is going to change the investment landscape. Suddenly, It's good for a company to be profitable so they can buy more Bitcoin rather than just speculating on growth and cheap money. So that's a good thing. And then how I'm going to see the next 24 months playing out is very difficult to say. I personally expect the worst. So in order to be able to weather like the worst, I think it's just important to accumulate as much Bitcoin as possible to be able to hedge against that. Because something that is beautiful about Bitcoin is it exists independent of the fiat system. And now for the first time, we have a high interest rate environment, but Bitcoin is still ripping. Because people were always speculating, what's going to happen, and even if there's a halving, what is going to happen to Bitcoin in a high interest rate environment? But as we can see, even in a high interest rate environment, Bitcoin is thriving, because Bitcoin does not only absorb new money coming into the economy, it absorbs monetary premiums of other asset classes regardless. So by incorporating Bitcoin in our business strategy, we become more and more independent of central banks and their decisions. And ideally, in 5 to 10 years, when we have a conversation, I would like to say, I don't care about interest rates. I don't care about the decision of a central bank, because we exist independent of them, because we operate on the Bitcoin standard. So my goal is to bring us into a position where we are not dependent heavily or purely or only on central bank decisions.
Yeah, and I mean, you could make the argument that like Bitcoin really should have been or should be at 100K. We just had to flush out, all these over levered bad players in 2021, 2022, and then now we have so much new money entering the market. We can talk about the ETF, but
Mhm.
some people still view it as like this risk on assets. So I'm curious, if everything does like tank, is it like a 2020 environment where it's like Bitcoin also tanks, but then shortly like hard V rebound, or is it just like a direct, oh, I need to get into Bitcoin? And I don't think it really matters, because
Yeah.
again, the takeaway is the same, is accumulate, but it's interesting to think about, because is it a risk on asset, or is it like a safe haven? And I think in the long term, obviously there's only one answer, but in those short term, like, panic decision moments, I still think people are just going to be like, all over the place. But now we have this whole new steady flow of buying power coming into the market with the ETF. So maybe talk about that. We haven't talked about it on the podcast since they've been approved. How has this changed everything in Bitcoin?
Yeah. So something that actually I think, I can say it makes me sad, is that I was hoping when I got into Bitcoin that this is the bottom up grassroots movement. But unfortunately, most of the people even that I talked to, and I think I was pretty annoying to all of my friends, by like, buy Bitcoin, or, it's all a scam. We need to separate money from state. But 80% didn't get into it. So unfortunately, I think Bitcoin is going to turn in. Well, I don't want to make it sound too worse, but at least it wasn't adopted as fast as I would like it to be from from the bottom. So now we have these big financial players coming into Bitcoin. It's gonna become part of the legacy financial system. We can't do anything about it. That's just what's going to happen. And for all of us that bought enough Bitcoin, yes, it'll be good, because the price of Bitcoin will rise. But I think it's going to rise so fast that it's going to price out a lot of people, which is just a shame, in my opinion. But that's just the way of, I guess, the way that things go. Bitcoin is going to become part of the financial infrastructure one way or another, and everybody could just buy Bitcoin. But I guess people, and especially institutions, they are so intertwined with the legacy system that they just won't do it. And now through the ETF, they get exposure to Bitcoin, which is good for the Bitcoin price. I mean, we can see it, and I think we also briefly talked about it this morning. In early March 2020, when COVID hit, Bitcoin went from like 9,000 to 3,000. I don't know the exact numbers. And now we were just going like straight up, right? Because we didn't have a macro or geopolitical issue that caused the price to drop. And we've got exposure now to the legacy financial system, and they pumping billions of money into Bitcoin. So that's good, but we should remind ourselves Bitcoin is a grassroots movement. And I think we shouldn't cheer these legacy financial players coming into Bitcoin too much. But it's just, we can't criticize it either, because that's the way that the world moves.
Do you have any concern? Well, first off, I agree with you. I think we said this morning, like, it is what it is. I don't really see it as like a super negative thing or a super positive thing. It's the reality. I mean, we can be thankful that we had, years to, get in beforehand. We can be sad for our friends and family members who haven't, and may be priced out in 2 years. Like, this is a realistic reality to live in, where Bitcoin goes to 1 million in 2-3 years because of this new capital inflow. But is there anything you're concerned about? Like, are you concerned about BlackRock maybe owning 1 million Bitcoin in a couple of years, or having just a high amount of centralization in the custodial side of things, in just the financial institution side of things? Like, what are your, I guess, biggest concerns about this whole entire situation?
Yeah, I mean, the good thing, the way that the Bitcoin network works, and even if BlackRock now starts to run like 100,000 nodes, that doesn't matter. It's not that one player who runs a lot of nodes controls the network. So that's the beautiful thing about the decentralization of the Bitcoin network, is that both running a lot of nodes or owning a lot of Bitcoin does not make you control the Bitcoin network, which is a good thing. But obviously having one custodian, which is Coinbase, that custodies, I think, Fidelity has their own custodian and a few others, but they custody most of the Bitcoin. That is a third-party risk. That is an attack factor and so forth. But I do not think that anybody will be able to control Bitcoin, because that's the nature of the network, that is uncontrollable. So my concerns with the ETFs are mainly around the pricing structure that's going to price out a lot of people. Of course, if Bitcoin is good money, which it is, which we believe in, you can get into Bitcoin even 20 years. It doesn't matter, because you want to use good money regardless, right? And even if Bitcoin in, let's say, 10, 20 years only grows 10, 12% year over year, that's better than storing your money in an inflationary currency that drops in value over time. So the positive aspects of Bitcoin, they stay regardless.
How about from like an adoption perspective? So you're thinking it could impede adoption a little bit by pricing people out. How about its progression as a form of money? Because I almost see it as like, if it's impeding adoption a little bit, like they're almost like stamping like store of value on it, but it's like, will it ever go past that? Like, when's the next progression to like a higher form of money, to where, maybe we're using it more on a daily basis? Obviously this is big in the Bitcoin community, building the Bitcoin circular economy. I think the ETF can be a bad thing for that. Kind of like what you're saying with pricing people out.
Yeah, an interesting thought. I mean, overall, mainstream acceptance of Bitcoin will grow because of Bitcoin. So some of the people that I've talked to that should have bought Bitcoin early on and that did not, they're doing it now because of BlackRock. So for general adoption might even have a good effect, because people still trust these legacy players for whatever reason. In terms of money, of course, the velocity of money has an effect of its use as a store of value. But as long as Bitcoin grows faster than interest rates, it is actually smart to borrow against your Bitcoin and spend fiat rather than spending your Bitcoin. The only reason for me to spend Bitcoin is if I interact with someone who is a Bitcoiner, because for me it's the highest appreciation, like to give someone Bitcoin. So like, I zap people on Nostra, I send value for value tips to podcasts. If I buy products of people that sell them a Bitcoin, I buy them a Bitcoin because I know they're Bitcoiner. But I think that in order for Bitcoin to become money, not money, become a medium of exchange, that's going to take decades. I think we as Bitcoiners, we sometimes overestimate the adoption of Bitcoin. So I don't know if that answers your question, but I think for Bitcoin become a medium of exchange, that will take out decades, because the fiat system can exist for longer than we think, because central actors are able to print money to amounts that are unimaginable. And they did learn from, like, say, the Weimar Republic, where from 1918 to 1923, so the government in Germany back then was called Weimar Republic, because there's a city of Weimar in Germany, which was named after a meeting there. And they inflated the currency by a few 100,000%, I think, in that time frame. And the Fed knows they can't inflate that aggressively, so this transition can take decades, I believe. It can really take decades.
Yeah, I mean, I think it's a great point, because it always takes longer. I think this transition period that we're in is, it's going to take a long time, but maybe that doesn't mean that the price of Bitcoin is not going to skyrocket in the near term. It just means, the day-to-day use of it. And I think as you continue to devalue the currency, it'll probably just grow. But I don't think it's really ready yet either. Again, we were talking about this earlier. It's just, there's too many hurdles to accept Bitcoin for payment. And I mean, it's just kind of like, you have to be a hardcore Bitcoiner to really want to go do that.
Yeah.
Maybe the last thing about the ETFs is really just like, do you think this brings in some regulation that could potentially be threatening to things like self-custody? Or, I mean, I don't know how it is in Europe versus in the US. Like, there's always these, like, little pushes, right? Like Elizabeth Warren or like the against the mining coalitions. And, I've talked to Marty Bent, and he mentioned similar things. Like they're actively campaigning against Bitcoin and cryptocurrencies as a whole, but they could attack it from like a self custody and be like, oh, you only can own the ETF, or like you have to have a third party, else that's risky, and could just regulate it from that perspective. Is that a concern for you at all? And how do you see the dynamic maybe in regulation differing from country to country, from Europe to the US?
Yeah, Elizabeth Warren. I mean, there are some politicians, I think, who also understand jumping on the I'm anti-Bitcoin or anti-crypto bandwagon is like a marketing tool basically for them, because like also we make fun of them, which actually sometimes helps them because it like brings them like their social media post more attention, But in Germany, I will talk about Germany, and then I will shortly talk about the US, but my expertise lies obviously more in Germany than within the US. So in Germany, the BaFin, which is like the SEC, they regulated Bitcoin since 2016, and it's treated like gold. And if you hold gold for longer than 1 year, or any gain that you make is tax-free. Yeah, so that's the way that it works in Germany as well. And the Greenies they are pushing some anti-proof of work agenda. They're pushing some anti-self custody agenda. But maybe I've been in Bitcoin for too long. But when I wrote my master thesis, for example, which we discussed at the beginning, in 2015, I had one chapter that was only about the risks of Bitcoin. Bitcoin being like the off and on ramps, it being illegalized and so forth. And I came to a conclusion, which is a bit of an analogy, but I said the only way for Bitcoin to be stopped is through world peace. And what I mean by that is the following. In order for stop Bitcoin, you would have to stop mining, you have to stop the on and off ramps, you would have to somehow stop self-custody. Obviously, you can't stop self-custody, or you can't stop people from using Bitcoin because there are just numbers, I can have them in my head. You cannot make it illegal to think. But if, let's say, Russia, China, and the US and the European Union would take a unilateral stance together against Bitcoin, that's what I mean by world peace. They would all have to agree on something. And we know that nation states, they can't even agree on tariffs, so let alone they agree on something like Bitcoin. And because they have underestimated Bitcoin, it grew to such an extent that I looked recently, if you want to control the Bitcoin network, you would have to buy like 1.4 million S19s. You probably won't be able to get them. That would cost you like, let's say, depending on the price, between 5.8 to 7.9 billion just for the equipment, and 2 million in energy just to run it. So it became so costly
for like,
for 10 minutes.
Yeah,
for 10 minutes, right? So it became so costly to control the Bitcoin network that itself is unprofitable. And I believe it's impossible for nation states to control Bitcoin. So now what I run off, I don't really worry so much about what could happen to Bitcoin. I just concentrate on stacking and self-custody, and not paying too much attention to the FUD, because I think generally speaking in life overall, it's better to pay attention to the positive things while being aware of what the negative consequences could be. And circling back now to real estate, owning real estate in itself creates a local dependency. So real estate in Germany and in France, the term in French is different, but if you translate it, it means the same. In Germany, it's called Immobilien, which means to be immobile. And in a world of increasing conflict, storing your value in an asset that can be taxed or destroyed or confiscated easily is a bad idea. So I'm more thinking about how to circle all the productivity and the value in real estate into Bitcoin, and not worrying so much about the negative consequences of having it in Bitcoin, because I believe that why does Bitcoin exist? Because nobody can stop it. And there's a great video by Andreas Antonopoulos where he pretty much explains the innovation of Bitcoin is that it cannot be stopped. And I firmly believe Bitcoin cannot be stopped. Like the life of a Bitcoiner can be made hard. The Chinese have tried it. People can tax Bitcoin for sure. I mean, if Bitcoin hits, I think 500,000, it will reach the market cap of gold. And by that point of time, governments will see it as an asset that is worth to be taxed, because that will happen, let's say, in the next 5 to 10 years. And at that time, the fiat system will be in more trouble, and they will be looking for revenue streams, and taxation is always something that they like. So that's something I'm concerned about, that Bitcoin can be taxed. And I'm not talking about only taxing when selling. I'm talking about something like a property tax. So let's say you have okay, you need to pay 2% yearly on your Bitcoin. I think in Holland or in a different European jurisdiction, there's a law like that already. And having an asset that compounds annually obviously makes it very unattractive to pay taxes by just holding it, because then you miss out on the annual compound deflation.
This episode is brought to you by Wyoming Based, my new apparel company that is focused on providing high quality natural fiber based products using 100% US supply chains. Our first two products, the 100% wool everyday beanie and 100% wool rib sweater, are proudly made right here in Wyoming using local wool. The wool is low itch, high quality, and durable, naturally antimicrobial, and way better for your health and the health of the planet. If you want to support a local US brand and are tired of supporting woke outdoors companies that shill plastics, check us out at wyomingbase.com and pre-order your sweater and beanie today.
Yeah, to me, it's always been like the biggest risk to Bitcoin is like sound monetary policy by the Fed. And that's just a risk. It's not like it's already too late. Like you can't stop this thing.
Mm.
And again, like we're saying, if the high interest rate environment, it's doing more than fine. You know, it's mooning in a high interest rate environment. And even if the Fed does everything right, like even if they don't print any more money, if things do, you know, the floor drops out, like it's just, which is not even a reality. Like there's no chance that doesn't happen. They're going to continue to expand the balance sheet. They're going to continue to grow the monetary supply. They have to, because our debt bubble is so large. But even if they did everything right and they really let a nice recession like play out and kind of washed out all the shitty companies, you know, borrowing, over levered, then, you know, it's already too late. Like everyone's already realized the importance of scarcity,
Yeah.
the impact of inflation, and that Bitcoin is a fantastic option. So that's how I see it. It's like it's already too late. Like maybe 6 years ago, if they just started practicing sound monetary policy, it'd be fantastic. But now it's too late.
Yeah, I think so too. Yeah, no, I think so too. Yeah.
So I know we're short on time here. What are you most excited about in a more Bitcoin-centric world in the next 5-10 years? It could be 20 years, more immediate, doesn't matter. What are you most excited about to see change on a more Bitcoin standard or just a more sound money world that we live in?
Mm-hmm. So what I like at the moment, these Bitcoin circular economies. So that's very cool. I really much like that because they give people the opportunity to find access to finance where there was none before. The lowering of time preference, like maybe allowing people to be less fearful of the future. Like I can always talk about myself. Bitcoin has made me more optimistic for sure. I really like what you talk about as well, food in particular. A fast time preference lifestyle affects a lot of different areas of life. So it's then quantity over quality. So going back to more quality rather than quantity, because we don't need to constantly consume, produce, but we can just maybe sit on our Bitcoin that deflate over time, give us more purchasing power, have more time to do things like what we did this morning, jump on a river, connect to nature. That's what I really like. Like through Bitcoin, Bitcoin allowed me to connect more to nature, basically become happier, more thoughtful, living in the moment. And then on the business side, what I find interesting is the credit markets in Bitcoin, because when I talk to a lot of Bitcoiners, also tying it back to real estate, they always say, oh, when Bitcoin reaches 100,000, I'm going to buy a house with it. Or when Bitcoin reaches 1 million, I'm going to buy a house with it. But actually, you never want to sell your Bitcoin. You only want to spend it in Bitcoin circular economies. And you'd rather want to lend against your Bitcoin, because as long as Bitcoin rises in purchasing power faster than interest rates, it's actually smart to keep your Bitcoin, borrow against your Bitcoin, and spend the fiat currency. So the credit markets around Bitcoin, where you do not have to give up your keys, but you can use your Bitcoin as collateral to lend against, to then have money to consume with, as long as we are in this like transition phase, I think like personally like interests me a lot.
And how long do you think before it'll take to get to a point where Bitcoin is like the best collateral in the world?
Mhm. Good question. I think it could happen
Because
within.
right now it's not like you
No.
try and get a Bitcoin
Yeah.
back loan or something, like it's pretty shit
Yeah.
rates and all that.
It will take 5 to 10 years at least. I'm talking with a lot of players in the market because I'm also actively seeking opportunities because we have a very debt intense business. And so far there's one or two options, and these options are new, so they're risky, so you can't work with big amounts of capital because you risk losing that capital. And the worst thing that could happen is either giving up your Bitcoin keys or losing the keys overall and losing your Bitcoin. So I mean, let's say 10 to 20 years, and the number one collateral in the world right now is real estate, but it's very, very, I mean, it's a high maintenance collateral. And I facilitated a loan recently. So like the first Bitcoin loan we facilitated with our company, it took us around 3 hours. If we want to facilitate a loan with real estate, it takes around 3 months. So the inefficiencies by using real estate as collateral, yes, it has cash flow that you can use to pay back the debt, but also the way that we incur debt needs to change. Like right now, we're so used to incur debt all the time, which is actually not a good thing. So if you would own Bitcoin and use it as collateral, people would be more thoughtful for when to incur debt, which would actually be a good thing.
It would just, yeah, I mean, business practices would become much more efficient, much more profitable by installing those values. I completely agree. So, Leon, thank you so much. Where can people find your work, your writing, and what you're working on?
I just set up a website called leonwankum.com. You find all my work there. There's an open book that I wrote, which I put out for free, called A System of Rules. So a systemofrules.org. You can read my book, which is basically an extension of my master thesis from 2015, which goes into the very basic concepts of who the cypherpunks are, what money is, what central banking is, why we need Bitcoin. And you can find some of our podcasts online.
Yeah, and you're on X or Twitter as well,
yes.
So we'll have to link that. Well, thanks so much, man. It's been a pleasure. We'll definitely have to do this again.
Thank you, man.